AC faces upbeat Chinese markets ahead of the State of the Nation address. The load-shedding crisis is expected to be the key issue in President Cyril Ramaphosa's address this evening. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joins us now for the latest market news. Makwe, very good morning to you. Thank you for your time. Give us an overview of how the markets and the rand are trading this morning after the rand plunged to a 2-month low.
Morning, employees. We continue to trade in the positive, and I think that's in line with what's happening with international markets. As we all know that now lately markets have been dominated by central bankers, but I guess at some point markets have to start to be driven by economic growth and also earnings growth. But as it is now, central bankers indicating that they'll continue to increase interest rates, though not that aggressive. I think that is what is keeping markets excited, that yes, rates will stay there much longer at elevated levels, but we don't expect to see aggressive rate hikes going forward. And the rand at the back of what is happening with the US dollar still and a stronger foot, the rand continues to struggle. So as a result, the rand is also going to be affected by what is going to be happening later when it comes to the State of the Nation address.
Yeah. With President Cyril Ramaphosa scheduled to deliver government's policy objectives and plans for the year ahead, what do investors need to hear in order to buy into South Africa's economic recovery?
All we need to hear from him is that he must create an environment which is conducive for business to do business. And one of the things that they need to look at is infrastructure. At the top of infrastructure, we are looking at the lack of load shedding, and also the rule of law is very critical, because we know we're at the brink of being grey-listed. Come the 24th of February, we'll be knowing whether our policies, our laws in the country are good enough to combat the likes of money laundering. So that continues to be important. And all you need to be successful as a country, you need a healthy and an educated nation. And definitely that nation will be very productive.
ArcelorMittal South Africa Limited has published its financial results for the year ended 31st December of 2022. Help us make sense of that performance.
The guys warned us that come second half, when they release the first half results, that it's going to be difficult, and we've seen that. And in a situation where you get to see prices going down and in an environment where the demand itself is not impressive, that tells you that you'll struggle. And if you look as well that the price increases globally of steel continue to decrease at a faster rate compared to raw material cost, and you look at the raw material basket in rand terms increased by 38%, sales volumes down 13%, and when it comes to the crude steel production, it's down a whopping 20%. Hence, their profits as headline earnings per share are down 62%.
Now, furniture retailer Steinhoff, Makwe, has placed 240 million Pepkor shares in a bid to raise capital towards shedding its debt burden. What's happening in that space?
It was very successful in the sense that, remember, their debt burden, which is due in June, is almost 10 billion euros. And yes, the guys wanted to sell almost 6.5% of the issued share capital of Pepkor, which was almost 240 million shares. But because demand was very high, they ended up selling 265 million shares, amounting to almost 7.2% of the issued share capital. And remember, before that, they used to own almost 51%. So their ownership is down to 43.8%. And that 4.9 million that they managed to raise, they're going to be using that to pay that debt. But in euro terms, it's only a mere 257 million euros. And as we know, that was almost a 5.3% discount compared to what the share price is trading today, meaning they managed to sell the shares at 18 rand 50 a share.
And in a very concerning development, Walt Disney has announced plans for a dramatic restructuring, including 7,000 job cuts. Talk us through those developments.
It just shows that it's just difficult for everyone, We've seen that the tech industry have been shedding jobs. We've seen the banks struggling as well when you look at their earnings. So yes, the guys, they are looking to save almost $5.5 billion. And one of the ways is to be cost effective. And one of those things, as we know, that all companies, when it comes to salaries and wages, that happens to be one of your hugest expenses. So it makes sense to reduce that. but they expect to continue to grow revenue mainly from sport, and they don't even intend to list ESPN separately. But that is just a clear indication that as much as we might want to ignore the possibility of a recession, but if you look at what companies are doing, because at the end of the day, companies are the ones which are driving the economy, that they're struggling going forward, they have to do something, reducing employees, then unfortunately it tells you that we just have to wake up to the fact that things are not looking that okay going forward.
Right, let's leave it there for now. Thank you so much for your time and that very thorough analysis. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joining us there for the very latest in the world of business as